All right, what's up, everybody? Welcome to the High Performance Trader Discord weekly recap, right? So today we're going to be breaking down the week, strategies we use, right? The mentality it takes to adapt to market conditions and to consistently identify highly profitable and highly probable trades each and every single day, right? So what's going on, Darren? We got Darren that's live from, where you at, Darren?
I am in Texas, Port Aransas Beach right now, checking in on the HPT recap. Looking to go over the trades we made this week and just talk through the psychology and improve our strategy here. But yeah, I'm feeling great on this Saturday.
Nice, man. Good, dude. Well, listen, we love to have you. Super glad to have you, man. And yeah, we're gonna break right into it. So, Darren, you want to read through real quick what we got planned for today?
So yeah, I just wrote down a couple things that we want to talk about. First off, using the break and retest on the larger time frame just to analyze the market conditions. That was huge this week as we kind of solidify bullish conditions and the bull market coming back. And then we got want to walk through the psychology of that break and retest and basically how sellers making their money back is not the same as bearish sellers, right? And just talking about the differences there and how you can use that to your advantage. And then just some strategies of holding above pre-market and strategies that we can use as we solidify this bullish market because it's been very choppy the last couple months and we've been seeing success using different strategies, but the strategy for the bull market where you hold above pre-market going long, using pre-market high and pre-market low as indicators is something that we can use as we see this uptrend.
Yes.
So that, and then talking about how we can create structure in an unstructured environment, creating rules for ourselves.
Yes.
And some days when you just don't see the market action that you want, how you proceed, and different strategies to do that. So yes. I think that's a pretty good little outline for today.
Amen, dude. That is a nasty lineup, right? So basically, the main thing that we're going to be going through and what we used this week to make money was the ability to adapt to market conditions. Now, I know we say this constantly. We are consistently going to adapt to market conditions, identify market conditions. I just really want to flesh out what that actually means, right? So as traders, right, our goal is to identify direction, right? We must get in a trade that we are expecting a move either to the upside or to the downside, or we are playing the sideline because we do not see our conditions, right? So basically, in a nutshell, the reason why I love this break and retest over here that I got 4 hour time frame on SPY is when specific areas that we already identified are broken. What that does is help us understand who is in control of the market so that we can capitalize off that move to the upside in this example, right? Because basically you got certain areas where you got buyers, you got sellers, right? So if sellers are not defending this 414.43 area, what that's telling us is buyers are much more stronger. So who do you want to trade with in these sort of conditions is buyers, right? So we're going to be breaking through today how we use that strategy of the break and retest and how we trade profitably and consistently off it, right? It's really cool stuff. I know we've talked about the psychology behind it before, right? And it's so important to understand how this is an auction and how these behaviors, right, give us opportunities to make money, right? So we're just going to break down the psychology of it before we go any further. So basically the psychology behind the break and retest, right, in this example is we have this 414.43 area over here on the S&P 500. And every time price comes up to this area, it's met with selling, right? So price came up right here and it sold off. Price came up here, sold off, right? And that continuously happened. And then we started to make lower lows. But you can see here, buyers love this 410 area or this 409 area. And when I say buyers love it or buyers defend it, what that actually means is every time price comes into 409, the demand for shares increases, right? Buyers step up. They love this 409 price, and they continuously buy it. So, and it's the same thing over here at 414.50, but with sellers, right? Sellers keep selling here, creating more supply. So that's when you get a nice little range, right? This is a more balanced market auction right here. And then you finally get a breakout. So what this breakout's telling you, right, is buyers prevailed past 414.50. And I just want to show you what that looks like intraday, because that's going to play a big part going forward. So I'm going to whip out the 5-minute. Look at this volume here at 414.43, right? It's insane, right? It literally ramped up. This is in the middle of the day when volume's actually usually kind of low. So for whatever reason, volume ramps up. So since we're price and volume analysis traders, the main thing we look for is price and volume. We don't have indicators, no oscillators, no RSI, no MACD, no moving average, right? What we're looking at here is volume and price. In volume, buyers are defending this price of 414.43. And Darren, check it out. Perfect break and retest there. Look at that. So not only have we identified this on a 1 hour time frame, look at that, dude. And that's why I love these strategies. It doesn't matter which time frame you're on. They literally are telling us the exact same story. It's insane. So we basically, price rips past it. Now, all the people that went short here, right, at 414.50, they are now in losing trades, right? So now their accounts are down. They're down 30%, 40%, doesn't matter, right? But they are down. So this now changes their intentions and expectations of the market, right? So as price comes back down and retests this 414.43 area, you get all of those short sellers now stopping out of their trades. So when they stop out of their trades, instead of taking profits, they are now, thankfully, just making their money back. And what this does is generate super bullish conditions, because as they stop out of their trades, now they are providing liquidity for buyers. So people that went short are now stopping out of their trades, and when they stop out, they're actually buying shares back out of their position. So it's adding to the buying volume, right? It's adding to the bullish market conditions, right? It's adding to the edge, right? That buyers are in control. And then that's when you get this massive move to the upside, right? And basically, in a nutshell, that is the psychology behind the break and retest. It's super.
Yeah. So I think another thing. Can you hear me, Josh?
Yeah.
Okay. I think my connection is a little spotty, but so the way that I look at it too is we had that supply zone at the top around 415. And that is where a lot of people went short. Like you can see a little hiccup in price at that level, and those were the sellers that stepped into the market that you were talking about.
Yeah.
And then once we came back to that level, and they saw buyers on the tape. Who knows what they saw, but they saw that, and they saw their money come back a little bit.
Yeah.
You know, they're in the green. That's where they take they exit their trade for a small loss and make some of their money back.
Right.
And it was natural to expect some sellers there, but the thing is,
absolutely,
that's where we transitioned out of that range and out of that balanced market.
Yeah.
And so conditions were changing drastically at that point, and so it makes a lot of sense that we saw that price action.
Right.
But another thing is, at least on SPY, there was that clear, those lower highs being put in, creating that little wedge, I guess, forming.
Yes.
And then we broke out of that in the middle of the day, where we saw all of that volume come in, and that basically right there is where we solidified. And once we broke out of that little flag, is where we solidified that uptrend, which lasted for Wednesday, Thursday, Friday.
Yeah. Yeah, so basically this is what it looked like right here on the 1 hour, right? We broke past this 414.50, right? So now how I traded this, right, is this is what pre-market looked like. Pre-market, we got those buyers defending that area. We got those sellers stomping out of their trades, right? So now I'm looking for entry to go long, right? So basically we open, and we consolidate above this 414.43 area, right? We get this nice little move out of this downward trend. A little flag right here, little bull flag around VWAP, right? This is a perfect indicator where if I get volume, I'm taking the market long, because what that volume solidifying is that buyers are here, right? And that big money, smart money wants this 414 or 415 area, and that's exactly where we went long. And I'll just show you where we got our target from. Our target was way back here, and you know, I want everybody to understand, right? You don't need to make this complicated, right? Notice where I'm grabbing my target from. My target is literally from a previous swing high, right? And all the swing high is at that time, that was the highest price, right? So this is what it looked like. We got this is just the next high. So these are where your targets need to be. Don't make your target just 20%, 10%, not even 50%, right? Have specific entries and specific targets. This is the process of developing a trade plan, and it is so important, because until you can develop a trade plan and stick to it, you're never going to reach consistency as a trader, right? You really need to have a specific entry, target, and stop loss on every single trade, because that's measurable, right? And once you can measure it, you can then make that progress. And then it's really cool to see this area, right? Some sellers came in, and then literally buyers prevailed, and then the market just rallied all the way up to 420. So I love that break and retest. It's literally been it's played such a vital role. And you can see here, I'm on the 6 month time frame. SPY's at an all time high for the last 6 months. QQQ is at a yearly all time high. And we're gonna go over today, right? Like how we plan to trade this. But the market's definitely showing strength. I mean, look at this chart, dude. Look, like it's, oh my Lord. Look at this. Crazy.
Yeah. Buyers definitely buying up the demand zones, like clearly.
And that's why it's so important, right? And we talk about this, but
another thing I liked about Wednesday, dude, another thing that I like about that Wednesday trade was the risk to reward. It just made a lot of sense out of that the bottom of that range.
Yeah.
And and we saw buying and that zone at the top of the range was a perfect magnet, at least for my. I think that was at least like a 3-1-4-1 risk reward.
Well, yeah, dude, check. Yeah, oh man, Wednesday was awesome. So you're talking about this right here, pre-market low, bam.
Yep.
Yeah, look at that. So yeah, let's run through that real quick. So basically, we've been trading in this range, right? This 409 to 414 level. Oh my Lord, yeah, look at this. So there's a couple different ways to trade this on this day, right? And let me just pull this up right here. So yeah, did you take this, Darren? Is this where you went long?
You're kind of cutting out. I guess my signal's not great.
It's all right. So we have pre-market low here. I think what Darren's talking about is we got pre-market low over here at 410.67, right? And price comes down, buyers defend it. Now, as far as risk to reward, right? So this is really important as a trader to understand that anytime you put on a trade, right, you need to have valid risk reward. And what that means here is we are only risking, what is that, 40 cents to make a potential move, to make a potential $5 move to the upside, right? So let's just break down where we got our entries and where we got our targets, right? I'm gonna pull SPY over here on a larger time frame. So every day, and we do this on the Discord, is we look for specific areas. So when you're trading in a range, right, where you got this 410 area, you got this 414 area, you got this wedge forming, right, on a larger time frame. So this is kind of what it looked like on the 1 hour. So if we could get buyers to show up here at 410.30, it's a perfect situation to go long with a bullish scenario. So if buyers show up here, right, I'm targeting 414.50 because that's our previous swing high, right? So we'll break it down on a shorter time frame. We'll whip out the 5 minute. Oh, hold on. Okay, so this is what it looked like. Now there's a couple different ways to trade this. So Darren over here, he took it long at 410.64, right? And then basically buyers showed up. You could see the volume, super strong, right? Defending pre-market low. Perfect indicator to take the market long. Breaks above VWAP, retests VWAP, and then shoots right up here in the pre-market high. Now another way to trade this, right? Look at the volume over here at pre-market high. So with volume showing up here at pre-market high like this is telling us that this is a key area of value, right? And this is what it looks like on the 1 hour time frame. And I really want to introduce the idea of traders using the 1 hour time frame with the 5 minute time frame, because it helps solidify our edge that much more. Because if we need to trade with conditions, we must use a larger time frame, because it just makes it easier to understand which way the market's headed, right? So we're in this demand zone here on a much larger time frame. We have buyers showing up defending it, and then we break pre-market high. Now check this out. Once we break pre-market high, we come down for the retest, right? And then look at when the volume picks up like this. This is a perfect indication that buyers are in control. This is how we use the break and retest to trade properly with conditions, right? So we break right above pre-market high, we hold it, and then the market rallies, right? All the way up to 414, and then that's when buyers push past it, and price just rallied for the rest of the day. Super an amazing example right there of buyers defending market conditions, right? Wicked good stuff, right? And it's really important also to talk about how we had all this consolidation, and once price broke out of this consolidation, buyers were in control, right? So and we talk about this all the time, right? This is a market auction. It's so important to be able to understand who's in control and who is taking control of the overall auction. Darren, are you there? Can you hear me? Yeah, Darren's in Texas right now. I think he's having a little communication issues as far as his stuff's going, but we're just going to keep going, right? So let's break it down. We're going to start right here, first day of the week, which was Monday. Let me see. This was Monday, May 15th, right? So basically, in a nutshell, I want to just break down how we traded these days. There you are, Darren. And now this is why I love trading in ranges too, right? So every single day before the market opens, we run through specific bullish and bearish scenarios, right? So how we do this is we identify demand zones and supply zones, right? So in a nutshell, a demand zone is somewhere we're looking to take the market long, and supply zones is somewhere we're looking to short the market, right? So we were trading within this range, right? When QQQ over here had massive strength. Now this plays a very vital role, because you can see here, this right here is what QQQ looked like, and this is what the SPY looked like. So QQQ was continuously making higher highs, higher lows, right? We were seeing a lot of break and retest on larger time frames. Right? So one thing we're looking to do is trade with those. Okay, so as price is continuously going higher, and I traded QQQ a lot this week, right? And it was because of the specific reason. QQQ was continuously giving us bullish conditions, and my goal was to trade with them, right? So let's break down real quick. Let me whip out the 15-minute 10-day so I could show you guys exactly where I get my analysis from. So let me just 15-minute 10-day. Okay. So this was QQQ. Let me find Monday. This was Monday right here. Okay. So just like we went through on SPY, QQQ also gave us a perfect long opportunity, right? And let's just talk about it. So what I was able to identify on QQQ was an inverse head and shoulders, right? So we get multiple areas that buyers defended, right? So let me see here. Oh. Okay. So this is what it looked like right here. We had a very nice inverse head and shoulders, right? Where this 324.14 area played a vital role. We had this 323 area, right? And this so check it out. So not only do we have buyers showing up here, this is a demand zone, right? And we get this higher low, right? So this is right here is a key level of interest, right? And guys, keep it simple. Pre-market high, pre-market low, right? So basically what we're looking for here are specific areas where we're looking for large money to defend. So if I'm going into this day, right, and I see heavy selling all the way down here to 324, and then buyers show up, this is when I must take the market long, right? This is my trade plan. Now, I'm only risking about, what is that, 20 cents here? Because if price breaks below 324, I'm out of this trade, right? Because then my next area is going to be 322 or 323, and I'm not willing to risk $1 to see if I'm right on this trade, right? I only want to risk maybe 5, 10, 20 cents here. And look, price completely rejects, right? And then, so another thing I want to talk about though is, guys, if this is something you're going through and you want to put risk on the table here, just lower your position size, right? You don't need to jump into trades fully deep, right? And one thing that I've talked about before is it's super important for you to basically know when to put on full position and when not to, right? So if you see a trade like this and you don't feel comfortable that buyers are going to show up, you don't need to put on your full position, right? Start with maybe 1-2 contracts and then add to it, right? So basically buyers come in, buyers defend the open, right? So the open's another key area that you must keep your eye on, because look, this provides us a perfect break and retest off the open, right? So, and that's what I love about the break and retest. You can use this off any level you want, right? And this is going to help you solidify who is in overall control of the market. Hold on.
Josh, can you hear me? I think I'm back.
Yeah, there you are, Darren. What's up, buddy?
All right, good. Yeah, I like what you said about the pre-market low there, because the reason that I took that on SPY was also because, I guess you mentioned it, the inverse head and shoulders and pre-market low lining up.
Yes.
Providing that confluence.
Yes.
And again, if you look, it looks a little bit different on SPY, but you didn't necessarily have to buy up off of that right out of pre-market low.
Yes.
You could have used that as an indication that buyers were in control,
right? Because
sometimes you need that extra confirmation, and then we kind of solidified or consolidated, and then made a further rip to that pre-market high, which was that price magnet.
Yeah. Now let me say this real quick, right? So hold on, there we go. My mouse is acting a little crazy. So there's the inverse head and shoulders, right, that Darren's talking about on SPY. Price kind of breaks below pre-market low on SPY, right? Now QQQ has been way more bullish, right? And what I mean by that is, while SPY was in a range, QQQ is in an uptrend, right? So I think that's one of the reasons why I traded QQQ recently. But you can see here, QQQ comes directly down to its pre-market low of 324. Buyers soak this all up. And then check out this open break and retest, Darren. So we constantly talk about the break and retest. We got this opening price over here at 325.58, which sellers defended, right? So if buyers can break past this, I'm looking for the retest, and I'm looking for buyers to prevail here. And that's exactly what happened, because it's what we talked about earlier with that psychology of price movement. So if sellers here, right, are now selling out of their trade to make their money back versus selling their trade to make money, that is going to add to the market condition so much. And that's exactly how it ended up playing out. And then it rallied right up there to that 327, right? So
sure, there was definitely people who went short at that double top, I guess you could almost call it, at open.
Yes.
And then the market moved against them, and I mean, it was also combined with a VWAP test, VWAP bounce. So that's like extra confirmation for them to get out of their position, free up the shares, and price jumps back up.
Yeah, absolutely. So yeah, that was a really, really good day. Definitely provided a lot of opportunity there. And now the next day was another break and retest, if you'll call it. Hold on. I guess you know what it is, Darren. It's just I've been seeing this so much now, and it's really played a vital role to making money in this market. So let's break down SPY and QQQ the next day of consolidation. Now this day played some games with my head, because you can see QQQ, we are breaking above a previous supply zone at 327.30, right? So QQQ, we have this breakout here of 327.34. In SPY, we have this consolidation. We're still in the range, and we're just kind of moving down. So these are one of the days, right, where you'll see SPY doing something completely different than QQQ. So let me just pull out the 5-minute over here, and we'll break out really what happened. And this was okay. All right, let me see here. Where are my levels? Okay, let me do the 5-minute. Let's do 10-day. Okay. So that open previous day on QQQ played a vital role there. All right, buyers defended that one. And this okay, and then SPY over here, we rejected pre-market high. Okay, so basically we have end of day over here on SPY, right, which is 413.03. And we also have this supply zone at pre-market high. And that's why these pre-market highs and lows are so important, because basically, in a nutshell, these areas are telling you who's in control of the market. I don't think I did much. Shoot, hold on. Let me go about 5-minute. Okay. So this is what SPY looked like. Super choppy market this day. I mean, look at this. This is a perfect opportunity to talk about choppiness. Okay, so you know what I mean? Look at this.
Nothing great.
This day. Yeah, this is a day you do not want to trade. I mean, listen, we are all different. If you can make money on days like this, go for it. But one thing me and Darren really wanted to talk about is the trading with market conditions. If market conditions are choppy, right, you're putting yourself at risk, right? I mean, look at all these wicks, dude. We're all over the place. And it made sense because we had a lot of Fed speeches this week. We had tons of, what was it? We had tons of news coming out. The debt ceiling.
There was like 4 Fed speeches that day.
Yeah, the debt ceiling's going crazy. We just have all this different, data coming out, and you're gonna get days like this. So if you can't, let's just run through it. So first things first, we have end of day way up here at 413.03. Price can't even reach it, right? So that, I'm not gonna go short there. We do have a little supply rejection here that we ripped into, but we never touched. Once again, I don't want to touch that, right? QQQ, we broke past pre-market high and then broke below it. So I don't like going long on days like this unless I see something. So one area, the trade I ended up taking was I think I waited all the way to the end of the day. Oh yeah, this is so I went long off VWAP because I couldn't find anything that I felt that confident with, and that is what is going to make you a good trader, right? Because if you see a day like this and you're just like, okay, I'm gonna go long because we're holding above demand, right? That's not a highly probable trade, right? That's a trade that can hurt you. You're making yourself vulnerable unless you have that strict risk reward. You got to stay away from it, right? And I mean, QQQ did defend this 325 area, but this isn't really an area I would call like demand, right? This wasn't that good of a demand zone in my opinion. So we did have buyers defending it prior day, and if you were able to identify that, that's great. But I didn't see anything that much I liked this day. I ended up taking a long off VWAP. I think it was for it wasn't a very large trade, but it was highly probable, and I'm going to break down why. So we have this area right here, right, where these 5-minute candles could not close below, or they kept closing below, and then we finally broke past it, retested it. I did not take that trade, but once we tagged VWAP with these basing candles, I took the market long. It was a trade I took at the end of the day, 0 day, deep in the money. But what I like about these trades is you literally need to capture like a 30% move to make 50 to 100%. So I was able to make a nice little move off this. Traded with lower size, just because this isn't a trade I'm that confident with. What do you think, Darren? Oh, Darren, I think you're muted.
Sorry.
Yeah.
So I made my move on SPY. I was playing short, trying to target that demand zone that you have in green there.
Yeah.
And I went short after. One of my confirmations was those two highs. Those two highs, or not even highs. They were just those wicks to the upside on QQQ, which you just pointed out. That break and retest.
Yes.
So then price ripped up, and I saw that big wick to the upside, which now that I think about it, I guess I didn't wait for that wick to close. But what I did see was a very sharp selling on SPY, and that's where I went short. And I was up like 30%, and then the market moved against me.
Yeah.
Like really quickly.
Yeah.
And I basically stopped out. Yeah, right there. Yeah. So that's where I went short, and I stopped out. That was my only trade that day.
Yeah.
I think it was a small loss, but yeah, there was nothing really great this day. And now that I look at it, it was kind of bullish, but
yeah,
this is a day I went super small in size.
Yeah,
that's another thing, which you mentioned before. Is like, if you see choppy market and you're not seeing any structure, this is your opportunity to create structure.
Yeah.
And that structure can be whatever rules you decide about how large your position size is, how tight your stops are.
Yeah.
And it might seem like you're not in control of anything on these days, but what you are in control of is your position size, your stops, and not letting yourself get hurt, because I want to put risk on the table, but these days I just keep really small size, especially when I wasn't seeing anything good.
Oh, dude, you said it perfect, Darren, right? So our goal as a trader, right? We cannot control price action, right? We have this auction in front of us, right? We have the ability to get in any trades we like based on our criteria. If you do not have specific criteria, you need to get some, because if you're just entering trades without criteria, right? And what I mean by that is no discipline. You think you're trying to force a setup, right? Darren talked about keeping strict position size on a trade like that because there really wasn't anything there that he felt that, the choppiness was just telling him different, right? So as a trader, the more we learn to play defense, the better, right? As we continuously play defense. Now, everyone always wants to talk about their great trades, their $1,000 trades, or their 100%ers. But in reality, it's the trades that keep you from losing that are going to make you profitable. Because I don't care if you have $1,000 trades, if you're going deep full position size on days like this, you're going to get ain't alive, right? So it's like you talked about, creating that structure in an unstructured environment. That right there is what is going to make you a super successful trader one day, right? Like I did not see anything I liked this day. Price was all over the place. I wrote in the Discord. I ended up taking a step away. I just didn't see anything I liked. And yeah, could I have made money this day? Sure. Who couldn't have? But I would rather stick to my structure, stick to my criteria, than bend the rules and crush myself on a stupid trade. Right? I've done that for so many years. Right? Trying to force a setup. And and that was it. Just walk away. That's completely fine. It's actually needed.
And if you do have the ability to just not make a single trade on a day like that, that's amazing, and that's definitely a skill that you should keep working on and using. But
yes.
Days like this, I always like to participate in the market somehow and test my edge, but you got to remember to just do it with smaller size.
Yes.
And those are two different approaches. Maybe one of them is what you do, but you need to have rules.
Yes.
You need to have rules with Iron Plan.
Absolutely. And now look at this though. I really want to talk about what that congestion led to. So look at all this. We get this crazy congestion, right? Buyers, sellers battling, right? And then now anytime you see crazy days, I guess what I'm trying to say is after every shitty day, there is a wonderful breakout, right? So basically you get this nasty congestion. And all this is uncertainty, right? This is nobody taking control of the market. And what I mean by that is that the banks, the institutions, the large money, no one is taking control of price action right here, right? But once someone does, this thing's gonna rip. So you can see here, SPY the next day, right? We get this nasty rally. So once again, pre-market low, right? 410.40. Price rips down into it. Buyers show up, right? QQQ, pre-market low. Price rips into it. Buyers show up, right? Until I see my edge, I do not make a move, right? So this right here, this is our edge. I would take this, right? I took this trade. I was targeting the open, and it worked out perfectly, right? So I went pre-market low to the open. And then right here, I got stomped out, Darren, with my trailing stop loss. Because once I hit my target, I put a trailing stop loss in. And basically all what that means is I'm plus or minus $10 per option. So we literally rip up about $1 and retrace. I'm stopped out of the trade. But I want to break down this break and retest that happened on both SPY and QQQ. So once again, pre-market high, 412.45. Right? We got this open here at 328.61. Price literally rips up past it. Hold on. Oops. Right. Hold on. Lost it. Okay, right. Nope. Hold up. Right here. Okay.
Yeah, one more.
Yeah, there it is. Okay, so price rips up past it, comes down, retests it, and look at the volume. Look at the volume. We're talking 62 million, or my bad, 0.6 million shares being traded per 5 minutes. And that's about a, 200% increase than 0.14 million shares, right? So tons of increase in volume at this area. Price and volume, this is a perfect indicator. Take the market long. SPY did the exact same thing at the exact same time, and this is when we got a massive rally. So this is when I then took the market long again. And it's really important for us as options traders to save buying power for moves like this. So when I first started trading, I would trade all my buying power in the morning, and then I never was able to capitalize on these moves. And these are the moves right here where you make, I think I made almost like 700% on my call options this day. I literally bought them.
Crazy.
Yeah, dude. I bought my call options this day for around $30 and sold them for almost 300. right? It's insane how much money you can make on these. And what I love about that is you literally only need to throw $100 at this trade to make 1,000, right? And that's why it's so important to save buying power, right? Because you save buying power on this. You buy the 329 call options, literally 50 cents away, or I think I bought in the money. So in the money call options would have been around $60. And I mean, as they get deeper in the money, we all know they increase in size, are in premium. And that's literally what I was able to do. And there was no reason to sell anywhere, Darren. Look at this. I mean, we literally rallied. And then my target was let me just back up real quick. I'll show you where I got my target. Oh yeah, target was the swing high from the range, which is a 414.50. I mean, look at that, perfect. And then we rallied right.
That's where I would have taken it too. I mean,
yeah. I mean, dude, just
pretty big move.
Yeah. Oh, it was dude, it was massive, and that move right there changed the whole demeanor for the rest of the week. Because then that's when we get this lovely. And I remember I put on the Discord. It was at like 8:00 p.m. or 8 p.m. I was like, dude, I cannot wait to trade this tasty setup tomorrow. That's exactly what I said. Because I was looking at the 1 hour. It literally looked just like this. And I was like, oh my God. I was like, I cannot wait to trade this. And then now let's flesh that out, right? I think we already talked about it a little bit, but I mean, look at this.
I like how you did that trailing stop, though, because I feel like up until that point, there was no structure in the market.
No.
Like we were forming a wedge, but you got to wait for that wedge to break out before you go long again.
Yeah.
And it makes a lot of sense that you did that. That you did that trailing stop, because I mean, the day before just created a lot of mistrust in the market, you know? Like we were just talking about how there was no direction. No big banks were playing. Big money was not really present. They were just waiting.
Right.
And it makes sense that there was a lot of mistrust up until that point. So I don't love doing trailing stops, but I see how that would make sense right there. And then obviously you probably weren't going to do a trailing stop on the next one. You were just going to wait until your zone hit.
Yes.
Since there was direction.
So the way I've been doing it is every trade I take, right, and it alters, right? But so when I enter long, right, on this move right here, I'll put in a hard stop, based on where price will prove my trade plan wrong, right? So on this trade, I think I bought my options for around $112. My hard stop is at $90. I'm willing to risk $22 per option on this trade, maybe less, considering the fact that I'm only risking what is that, like 40-cent move, so basically though, what I do is I put in a hard stop, right, Darren, and then once I'm approaching my target, that's when I change my hard stop to a trail stop. Right. And it changes.
Oh, okay.
And so what I'm doing there is locking in profits. That's it. Right. So now that I'm up around 30 to 40% here, now I'm going to put in a trailing stop for like, $15 move on the options. And what's really cool about TOS is I think I put in my trail stop right here because we were starting to get some resistance. And when you put in your trail stop, it'll show up on the chart, Darren, and it'll be a line right here, and it'll say stop.
Yep.
And it's right below VWAP, right, based on how far you put it. So it's literally perfect. You know what I mean? So it's like my stop is right below VWAP, where if price rips below it, I'm gonna get stomped out, and then as price goes up, my stop goes up, right? So it's kind of cool. And then I
mean, it's nice when it lines up with it's nice when it lines up with VWAP. It doesn't always work like that,
right? Because
I mean, the trailing stop is just whatever. I mean, usually I set mine to like 16 or something like that. But it's nice when it works out like that.
Right.
Technically, like that is where your plan would be proven invalid.
Exactly.
That's where you would seem bearish.
Yeah.
And then you'd be out.
Yeah, and I try to get it. I try to get it like that. Obviously, it doesn't happen all the time, but Yeah, and then that move, and then this move right here, right? So now I'm in my option contracts. I think I bought mine for around 30 to $40, and now my trail stop and now I just put in a hard stop at like I think it's like $10 away, whatever, and then I'll see it'll be right below the break and retest. So now I'm in this trade until price closes below it, and then it'll rally, right? And then you can't really keep a trailing stop on these. Yeah, I mean you can, but at the end of the day, these option prices fluctuate like 30 cents a minute. It's crazy. So
yeah.
I mean, you're just gonna, you kind of just got to be on the ball right there, and then we break out of this, right, and then there's that volume solidifying that this area is of value, and if anything can come back to this area, I'm looking for longs, and that played a perfect role into Thursday, and I kind of want to show you guys, right, because I also traded Nvidia this day, and it was an insane move, and I just want to talk about that whole break pre-market high retest strategy, right? So Nvidia ripped about what was that? Oh shoot, like $15 this day, and I just want to show everybody how this break and retest solidifies bullish conditions. Right, so we were talking about how we change our strategies are going to change as the market changes. Right, as the market changes, whether it goes from bullish to bearish, whether it goes from balanced to imbalanced, right? We have to adapt as traders. So one strategy that I've used before in bull markets was the break and retest off pre-market high. This is a phenomenal strategy for capturing moves to the up or downside. So I want to show you guys where I got my target on Nvidia. I pulled it out from the 1 week chart. And the high of this candle was 313.33, right? So this was kind of, I mean, Nvidia's in such an uptrend, it's kind of hard to find targets, right? So this was my first target right here. And look at how the break and retest played off that, Darren. Isn't that crazy? Like, look at that.
It's perfect.
Yeah, isn't that nuts?
Yep.
So
and it's from way back, too.
Yeah. So and what's that telling us, dude? That's literally telling us that the sellers here are thankful they got their money back. or who knows? Yep. I mean, that's the importance of look at that, dude. Identifying areas of value and people getting in and out of them, right? So let's check this out.
I mean, what that looks like to me is buyers just showing up. So they could have waited. They could have waited till pre-market, or they could have waited till that break and retest at 307 at the beginning of the day.
Yeah.
But they didn't. They waited for price to break that supply.
Yeah.
And then a little retest, and they jumped right back in. So I mean, and look, then they defended it later.
Yeah, double, and that's why identifying these areas and seeing the defending. It's amazing. So check this out. Anytime you get a break and retest matched with VWAP as well, it's a slam dunk, dude. Like I'm currently collecting data on that, Darren, because I really want the specific. I want to know how.
Oh, the break and retest and VWAP.
Yeah, I want to know the probability for it.
That's good.
I'm pretty sure it's very high because every trade I've taken like this right now has been paying. But basically, in a nutshell, pre-market high over here at 306.42, right? Which is the highest price in pre-market, which means sellers defended it, right? It's very important to understand that. Sellers defended 306.48 here. So as price breaks above it, these sellers are now in losing trades, right? They're down, whatever. Their position is negative. So once price comes down to this 306.42 area, they are now stomping out of their trades and getting out of their positions. As they're getting out of their positions, they're providing liquidity for buyers. Look at this perfect wick right here. This is literally what it looked like when I called it out in the Discord. I seen this wick, and then I seen this green bar, and I'm like, I'm in. That is all I need that's telling me everything I need to know right there. Buyers defended pre-market high. This is when I went long. I went with the 310 call options. I bought them for around $330. And then as price rallied, I ended up selling these for almost $1,000 a contract because NVIDIA, I mean, dude, the swings on NVIDIA is crazy. I mean, $10 moves is nuts. So I highly suggest anyone trading NVIDIA, Tesla, anyone trading at all, any commodity, that you keep a reasonable stop loss, right? And that's what I did. I literally bought these for $300, Darren, and my stop was at 300. You know what I mean? I bought two of them, so I'm literally risking $60 here. I'm risking $60 to make almost 1,800. You know what I mean? That is how you want to trade.
Yeah. Let me ask you something, Josh. So do you remember how I posted in the Discord about my I did a little study of when the optimal trade entry would be for the month of April, I believe.
Yes.
And it turned out to be like in between 10:30 and 11:30, I think. But obviously that was for a choppy market because it took a little bit of time for structure to develop and for big money to make a call about where they're going to step in. But this strategy that you're using is what you used before, like around COVID, I guess, when during the bull market.
Yeah.
And do you think that optimal trade entry would be this early? Because that's pretty early. I don't often take trades that early.
Right.
But do you think in these new conditions it would be shifting earlier? It would make sense to me,
Absolutely.
right? Because if buyers are more confident, they're not going to wait around for too long. They're just going to hop right in and go long.
Absolutely. And I think it's important here to understand that, so to answer your question, absolutely. This trade happens a lot earlier. And this trade happens a lot earlier in the day. And I think it's got a lot to do with that whole confidence that you just mentioned. Because if sellers if this is the strongest area of selling, right? You got sellers that are super strong right here at 306.42, right? If sellers cannot defend this area, they're staying away from this. You know what I mean? They're going, hey, listen, buyers have already bullied past our strongest area, right? So now, I mean,
in the first 10 minutes.
Yes, exactly. So they're out of this trade. They're not defending that position. They're stomping out of it on the break and retest. And then for the rest of the day, it's just straight rally. And then, sellers ended up coming in a little over here, and then buyers defended this area. And then so on and so forth. It just rallied. So, no, yeah, absolutely. And that's why it's –
Did you use the 9-day EMA on the 5-minute to stay in that trade, or how did you manage that?
Well,
because it kind of went past your target, but there was no reason to get out at your target.
Exactly. So
I guess, right?
Yeah. So let me show you this real quick. So this break and retest, dude, it works. So check this out. Trade management. I love the break and retest because it literally helps you understand who is in control and when to get out, right? So this is when I'll whip out. This is what it looked like on the 1 minute. So how this works, right? And I'm going to pull up the 5 minute and the 1 minute because this is how I'll manage a trade here. So basically, you got the break across pre-market high here in the retest, right? This was my entry. Price then rallies. So now I got a previous swing, a previous high right here that I'm looking for another break and retest at, right? And what I mean by this is I am not getting out of my trade until we can close below one of these areas, right? Or my target. So we rip past this 408.38, right? Come down, buyers defend it. So now I move this up, right, to this area. So now I don't get out of this trade until we close below this, right? And all what I'm doing is identifying a break and retest all the way up. So, and then literally, bam, price still defends it, buyers still defend it. And then we make another, hold on. Oh, there we go. Okay, so now we make another one, right? Oh, wait, no, I pulled that up too. Why won't it let me click it? All right, there we go. So this was the previous, right? Until we close below this, I'm in there. Then we break past this, and then price literally rallies right into my target, and I'm out. But there was no reason to get out of this trade, right? So this is where we talk about I'm up, a heavy amount. I made a lot of money, and my mentality is telling me, hey, get out. You're done. You've made it. You don't want to give back your couple grand, right? Stay in this trade. Get out of this trade. And this is why our beliefs and expectations of ourselves is so important. Because until we can learn to believe that we're worth millions of dollars, we're not going to make it. Seriously, Darren, look at this. I had no reason to get out of this trade. I'm up. I think my options are up almost 300%, right? There's no reason to get out of this trade. And by the end of the day,
exactly.
Darren, these options were up almost 1,000%. I left big money on the table here just because I was like, I need to hold on to my 300%, right? And obviously, this is a skill all traders deal with. And you know what's so crazy? In my beginning years, I never really struggled with this. I would let these go forever. But as I, once you get a couple years in a bear market where you're getting eaten alive, I think it has a dramatic effect on your take profits ability. But and this is something I'm working on here. But there's no reason to get out of this trade. I mean, look, dude, we break and retest all the way up. Now let's just see how far we could have took this strategy up. Then we get another one, right? So in reality, there's no reason to get out of this trade until 415.96.
I mean, all those red candles look like profit taking to me.
Yes, exactly.
There's no real seller.
And now
none of those bear candles are engulfing at all.
Right. And and check this out. Ready? Break and retest on the way down. In reality, if I'm gonna trade the way smart money does, with the break and retest, my dude, there's no reason. Look, so this is where they're getting out, Darren. Because you break below it, retest it.
Yeah.
You see what I mean? So this is a strategy that works so well with not only entries, but exits, targets, and understanding the overall market conditions, right? It's so important. You know what I mean? Oh, what's up, Todd? I know you love the break and retest.
All the time. All the time.
Yeah, isn't that crazy though, guys? Look at that. Oh, yeah, that was a very good trade. But I really want.
What I like about the break and retest, Josh. What I like about the break and retest is it requires you to read price action accurately, and you're reading price action to get out of your trade as opposed to just like looking at your P&L or looking at a zone. It requires you to actually look at like what is happening with
right in front of you. Yes.
Right in front of you. A zone seems very easy, and sometimes you have to do that. That's the thing, and that's why like you're gonna get out at your zone, and then you're gonna see price rip through it. That's gonna happen.
Yeah.
But the goal is to look at price action and watch what's happening live time in the now moment, like you always say.
Absolutely. Like so obviously we love zones. But zones are nothing but key areas, right? Like I remember I used to be biased, right? Supply zone, go short. Demand zone, go long. In reality, zones are just magnets. And just because price hits them doesn't mean you're going to get that reversal. And honestly, after the month of April, right, where I had a lot of losing trades, all my losing trades were trading against market conditions. All my losing trades were assuming that buyers or sellers were going to defend their politically correct demand or supply zones. But in reality here, once you learn to trade with the break and retest and use that live time price action, right? You're like, once you start to use that, like you said, now you're managing your trade versus hitting a target. I mean, there was no reason to get out of this trade. I mean, obviously it was a phenomenal trade. We're going to break down Tesla because I did the same exact thing on Tesla. And that's one of my goals this week is to only trade or only stop out when price tells me to. So I mean, and just before we get off in the video, look at that VWAP rejection there. Perfect. You know what I mean? I mean, price comes down, tags it on the break and retest. You can see it perfectly on the 5 minute there. Just super flawless. Look at that. Oh.
Yeah, that's perfect.
And that's what I love about the 5 minute candle is, the first 3 minutes here was all selling. And then the last 2 minutes, you get those buyers. And think about it in an auction aspect. Buyers need sellers to go long, right? So as sellers are coming in strong, all what you're getting here is buyers buyers soaking up those sell orders. You know what I mean? It's literally that's the market auction in front of our eyes, right? You get all this selling, and then with those sellers, buyers are creating more demand. That's where you get these Bayesian candles. Boom. Lovely. Super good. All right. So now we're going to break down Tesla. Tesla was another one we took Discord here. And once again, break and retest. It's on larger time frame, right? It helps so much with identifying market conditions, right? So Tesla, we got this 177.40 or 177.38 area, right? Which was the high back on Friday when Elon Musk said that he was hiring a new CEO, right? So he came out here saying Tesla, he's stepping down as CEO for Twitter, and he wants to hire someone new. This brought tons of buyers into the market for Tesla. So then we got this huge cup, right? And then we got the breakout on Thursday aftermarket above this level. So how this strategy works is if you can hold above previous resistance, you're looking for buyers to defend it, and you take the market long, targeting a higher supply zone. So let's just whip out the 4 hour because my target was a little off here, and my profit taking was too. So we're going to break that down. So my target here was 183. And remember, when we draw our supply zones, our demand zones, right? And remember it's not perfect, but notice the close on both these candles, or you got the open on this candle and the close on this one held a little more weight. But overall, this is a supply zone we're looking to play into. This is what it looked like before the day, right? So we get this breakout here at 177.30. I'm looking for buyers to defend this and close this area. So this is what it looked like right before the day started. Let me just get rid of this green box. It makes it a little easier. So you got end of day here at and know what's crazy is end of day is nothing but a break and retest of its own. So anytime price opens above end of day, it come down, retest it, and buyers defend it. Or on the other side, you open below it and sellers defend it. So just keep that in mind, right? Because this, the psychological aspect of this plays such an important role. Okay, so Tesla opens way above it, consolidates, and then comes down, sells below it, right? But with the 5 minute candle here, it never closes below end of day, right? So this is where you get your demand zone here. And I think, okay. So yeah, you got your demand zone, you got end of day. So my goal here is to hold above this 177.38 area. Let me just pull up the 1 hour over here. And remember, Darren, we were talking about that 1 hour time frame, right? So the way I'll do this is I'll keep the 1 hour time frame open and, kind of get a feel for what is the overall collective mind of the market, right, with a larger time frame candle. And then you get that long wick into that demand zone, right? Price closes well above it, and then we rip past 177.38, and that was my entry, right? I was willing to risk, what was it here? So obviously price needed to hold below pre-market low for me to get out. So my entry was right here off this candle, and my stop loss was at 176.30. So I mean, I was risking a little bit here, about $1, but it was to risk $1 to make what was that, $5 or $6. So that's still a relatively good risk reward ratio. And then so price started to rally. We broke pre-market high, came down, broke below it, right? But my stop loss is down here, so I'm still in this trade. And then buyers kind of push and hold above pre-market high. And then once again, you can use the break and retest here. And it just wasn't looking the way – it wasn't as clean as I wanted, though, right? Look, I mean, you broke above it, come down. I mean, a lot of fighting going on. And if I pull up SPY, the market was just selling off, so I didn't have any confidence over here to stay in this trade. So I ended up just taking profits around this 180 area. I think it was 180.60, and it was directly related to my PNL. My target was way up here, and I mean, this was a really good trade. But even this amount of money of in-the-money options, I literally left probably another 100% on the table. So, I mean, it's a touchy subject, right? Because you really don't want to go, hey, I need to hit 183, otherwise I'm staying in this trade, right? Because that'll cause you to, this trade could go bearish, right? And it could go in the other, you could give back a lot of profits doing that. So it's really, that's why I like the break and retest, right? Because as long as the break and retest is valid, stay in your trade. You know what I mean? This will help you get the most out of it, and go from there. I think once we made this lower high, that's been a good area to get out of. And this is why it's so important, though, just to be able to identify current market conditions and use them to get in and out of your trades.
Yeah, that's tough. That's always tough. It's always tough to know exactly when to get out.
Yeah.
But I mean, it's in general, you do want to see as much confluence as possible. So
right.
The fact that you just followed those rules, I think it's going to benefit you, even if it didn't seem like the optimal thing to do on this specific trade.
Yeah.
You have to think about. Oh, I remember reading a lot about successful traders, and they always say, when you're placing your trade, think about your next 100 trades.
Right.
Like if what you're doing now, you believe it's going to help you in the long run, you should be doing it.
Yeah.
It's okay if it doesn't all make sense for this one trade you're doing.
Right.
But if you know it's going to help you in the long run for your next 100 trades, just do it.
Yes.
And think in terms of the long game.
Yeah. Yeah. No. 100%.
So that makes sense why you do that.
Right. Yeah. And that's why it's so, that trade management, identify your key levels, trade them, your break and retest, you know what I mean? It's really going to help you get the most out of the market. And as these conditions change, we're going to see a lot of this. I mean, look, guys, we're breaking above, man. We got key areas. I mean, look at this. This area on SPY was defended by sellers for months. We just broke past it. You know what I mean? This is a massive.
That's huge.
Yeah, this is massive right here. And I used to think, I'd be like, dude, these chart patterns tell the future. And it's not that they tell the future, it's that they explain the now moment, right? I think Darren, I'll never forget when you said it, but you said, we don't know the current market conditions because it hasn't happened yet. Right. So, I just loved when you said that, because that right there solidifies the patience and the faith it takes to become a trader. Right. So you literally got this area right here, 418.20, we'll call it. Price ripped past it. Now this is how I'm going to trade this. If buyers show up here, I'll go long. If buyers cannot hold this area, what is it? 417.60. That's telling me bears are in control. Sellers are in control. So literally keep it that simple. That's literally what I do. I will keep it that simple and make decisions based on that. And then I'll obviously break into a 5-minute time frame and be like, okay, this is my best entry. This is my best exit. Let's go. But that's literally all. That's all I've been.
Yeah, the thing with the now moment is like so a chart pattern, you can see it with your eyes, and okay, Head and Shoulders looks like this, and a Head and Shoulders is going to work now and in a month and in a year.
Right.
But market conditions are always changing. So
yes.
And it requires you to not think about the market conditions last week and what caused you to win last week. What caused you to win this week is not going to be what causes you to win last week. I mean, in some cases it will.
But you can't look at it like that.
Adapting to market conditions, you have to constantly be reevaluating things. And that's what's funny about trading is like we want to create structure, but at the same time, it's always changing. So you need to create structure and be flexible to make new rules for your structure, I guess, maybe.
Absolutely. Yeah. Well, right.
Yeah.
It's literally like, one thing I've been trying to do is just keep it simple, right? And when I see specific areas broken, right? So let's just break down, we'll break down Friday real quick. So Friday, there wasn't much, we had this supply zone up here. Now, what I guess you could say one thing I struggled with Friday was conditions to me were bearish if we were holding above end of day. So I didn't feel comfortable taking the market short right here. But you can see if you were trading in the now moment, like the live moment, price cannot make a higher high. And then we had this area right here, right? So we had this 419.82 area that if sellers broke this, right, this would be a perfect break and retest to the downside. Now, sellers broke it, price came up, retested it, bam. It's just so crazy how often this strategy works. I mean, look, so the way
on the futures too. At that same time, it was breaking and retesting the ES end of day.
Oh, really?
T at the same time.
Oh, really? Yeah. See, look at that. So, oh yeah, you're right, Todd. Hold on, let me get rid of this real quick. So we had an end of day right here. Oh yeah, look at that.
42.15.
Yeah, 42.15. Bam, break below. Exactly. So, and that's another thing, right? So, and one thing I said about this day in the pre-market plan was I was in a bearish scenario. I was looking for a gap fill, right? And it's so crazy. Gap fills are always filled. It's nuts. It's very rare that they're not. So going back, looking at that, check this out. And I don't know. It's got something to do with the supply and demand of the shares, and for all the buyers, all the buy orders need sell orders. So I think there's a massive imbalance in buy orders when a gap up happens. So that gap needs to be filled with sell orders to equal out the equilibrium or whatever it may be. But this sell off right here, bam, closes that gap. Futures have a perfect break and retest right there on end of day. And then that's literally all you need to see right there. I mean, that's why I'm constantly like when price is doing something like this, I'm going, okay, we're going to get a breakout. If we break up to the upside, I'm looking for a break and retest. We break out to the downside, I'm looking for a break and retest to solidify large money's move. And, check it out. Breakout, boom, fell way below end of day, came up. Look at the volume here. Volume just quadrupled. You know what I mean? So this is smart money making its move, right? And then, it literally sells off. I think the Fed was starting to speak too. And anytime Powell speaks, market tanks. So,
That's why it consolidated for so long in the morning. Nobody was putting their money up.
Yeah.
That happened.
Yeah, absolutely.
You've seen the drill.
And whatever it may be, I don't feel that, I don't like trading, days like this when Powell's speaking. But does that mean I won't? Absolutely not, right? Like, there's still opportunities. There's still money to be made. And as long as my criteria is met, right, that's what we're going to do, and that was the goal today, is to really break out having structure in an unstructured environment. And, so anyone out there listening, or, for anybody, just use that break and retest to identify who's in control of the market and, just trade accordingly. I think it's a trait that a lot of successful traders have, because in a nutshell, it helps you understand who's in control and you're trading with overall trend. And it's just crazy, because I always heard people go, oh, trend is your friend. But I never, I always just thought, and it really is that simple. If you're in an uptrend, go long. If you're in a downtrend, go short. But where it gets complicated is using a smaller time frame. So I just, I highly suggest people break out that 1 hour, look for key areas to be broken, and then just trade accordingly.
That saying, I don't know what they said. If you jump into the river and the river's flowing one way, don't matter if you jump in it or you fall in it, you're still going to go the same way. And that's how I look at the trend,
Yes.
You can be, if you're going in the right way of the trend, you can be a little sloppy with your entries and you're still okay.
Right.
You're still going to go that same way.
Yeah. I mean, look at that. I mean, we got this strong area right here we broke right out of. So yeah, I mean that's pretty much it, man. Darren, I think this is a really good recap. I think we covered everything we wanted to talk about. And yeah, Todd, I've been switching the day. I apologize. I think I said 10 o'clock. I know we usually do 11. So going forward, I'm gonna just pick a specific time. I'm not sure if it's gonna be 10 or 11, but I don't want anyone missing out on these recaps. But I think this was a really good recap. This breakdown the week and everything we're looking for. And I look forward to seeing everybody on Monday. And thank you guys for showing up. And I hope you guys have a good weekend.
Sure, appreciate it.